Hey everybody, it's Ken McElroy here, and I'm here with my good friend Melissa Murphy. We've been friends a long time. She's got a company called Prime Real Estate Group, and now you have this incredible presence throughout Idaho and Washington. Kind of walk everybody through your journey.
So, Ken, thank you so much for the opportunity. I read your book before we even had a chance to meet in person, felt like I was a fan before I saw you speak at seminars, and I followed your work and your success with MC companies. It's been incredible.
Oh, thank you.
This is a real treat to...
You earned it, by the way. I mean, I've watched you. It's been super inspiring. Like, you've taken real estate and made it into a business. You have lots of rentals and investments, and you have incredible company.
Thank you. Well, I was very fortunate at the early age of 21. A mentor gave me the classic Rich Dad, Poor Dad. And that truly changed my trajectory because I bought a property while I was still in college. And then I rented it out, and that's when the light bulb moment hit of cash flow. And it was incredible because...
So you did it.
I did it. And instead of some investors' challenge of analysis paralysis, I bought a condo, a house, a condo, and then jumped into a 12-plex at the age of 24. So
that's awesome.
It was quite a journey. I got licensed as an agent while I was getting my MBA, and quickly the rest became history. As within 3 years, I became the number 2 agent in our local MLS and top 5 for sales volume within 3 years. And then I've been in the top 1% ever since. So
wow. Okay, so let's back up because there's a lot of really good nuggets in there.
Yeah.
Okay, so the first thing you did is you read Rich Dad Poor Dad, and then you bought a rental, and you had cash flow. And then you said, this worked. I did it multiple times. At that time, you weren't probably really ingrained in the real estate industry as a realtor?
Not yet.
Yeah.
So it got me in the right direction. I assumed I would follow the professional path, go to law school, get a real job like most people dream about when they go to high school and through college. And when I saw the tangible results of being an investor myself and being able to share that with my clients. It's one thing to be a real estate agent and say, oh, you should buy real estate. It's another to be in the trenches doing it yourself, right, and being able to convey the pitfalls, the challenges at times, and then the wins in a real world environment to your clients. It creates a different level of authenticity and helps you better articulate why it is such a powerful tool for not only home ownership, but B, getting into the investment world.
Well, I just think it's awesome. And you touched on analysis paralysis because a lot of people get caught in that.
Yes.
You know, they want to make sure they don't make any mistakes.
Yep.
I get that. They have fear. I get that. And you don't even actually need money to invest in real estate, right?
Right. And you're correct. As we know, typically your first deal is the most challenging. And I work with investors who, will sometimes spend several months, if not years, analyzing before they make a decision. And then unfortunately, almost that FOMO of, just leads to maybe not always the best decision.
And then the prices have doubled, right?
That's correct.
Which has happened here. We're going to talk about that in a minute.
Right.
But that's right. You know, I mean, you just gotta, if the math works, the cost of the property, the loan, the cost of the debt, let's say, and the cash flow, if it works,
yes,
do it.
Correct.
Right?
Correct. Yes.
If it doesn't work, don't do it. You
right.
know, if you're banking on capital gains or appreciation, then you're probably going to get in trouble. If you're trying to time the market, you're probably going to get in trouble.
Correct.
Right?
Good point on timing the market, because again, we've had a fantastic run, and we've been so fortunate here in our local area. And again, what we were talking about before the podcast is just really the acceleration of those two. The more mid-sized environment is really something we've never seen to this extent before, which is exciting.
It's incredible. But before we get there, let's talk about your company, Prime Real Estate Group, because I've watched you start with one office,
yep,
and then another, and all these people, and like people that I know, friends of mine, yep, like are working for you now.
Yes.
So, all right, so let's talk a little bit about that and your journey, because this is now different. This is now running a business.
Yes.
Right? So at the same time investing and buying real estate, but actually growing a business is very different.
Correct.
So now you're in the people business and the systems business and all those things. So let's talk a little bit about that.
I started my company in 2012 when I saw there was some disruption in the industry. We didn't necessarily need as much the big brick and mortar office space. So I saw agents being more remote thanks to technology. We're able to do more DocuSign, remote work, and we built this incredible team. And I have a passion for education and sharing with my agents the numbers, the facts, and really driving down that educational component. So we've grown here in the Spokane market and the Coeur d'Alene market. We're up into Sandpoint, and we're even as far south as the Teton Valley in Idaho.
Congratulations.
So we've got roughly 30 agents. We also have a small property management company. And then my husband and I continue on the investing vein, continuing to add to our portfolio.
Well, congratulations.
Thank
I know
you.
that, you're still very young. You started young, and
Very young, right?
I cannot wait. I cannot wait to watch, where this is all headed for you. Honestly, it's very, very cool. So here we are in Coeur d'Alene, Idaho. As you know, I've been here for years. You obviously grew up in the area, and now we've got this COVID thing, that's, really put the brakes on a lot of things in some ways, but not in others, right? So let's talk about, because what I'm seeing is like my next door neighbor is from California.
Yep.
Right. These people on my other side were from also from California, and then we're seeing people from Seattle and some of these big cities. They're coming out of them, and they're coming into these smaller communities. And why is that? I mean, you're seeing it firsthand, right?
Right. I recall several years ago, an economist said, watch the mid-sized cities. And his prediction was, we have the millennials who seemingly want everything now. They want to be able to buy a home. They want to have a sense of community. And they're getting priced out of the markets. We saw it a little bit, but boy, COVID really accelerated that. Many of my clients are knowledge workers, which means they can work for a top tier law firm or work in a professional setting from anywhere that has a strong internet connection. So we started seeing that migration this way from the big cities where you just were priced out for a first-time home buyer, or even on the investment side, we saw a lot of people moving from the Seattle market over to our market for more favorable returns. So it's been really fascinating to see the expectation out there. Nobody knew what was going to happen mid-March. The fear went up, and then all of a sudden we saw not only the fear subside, but we saw more and more people seeking the safe haven of a less dense market. I would almost attribute it to essentially the tale of two cities. I think on a forward-moving basis, we're going to see a difference between the high-dense cities and the cities where you're not sharing mass transit, you're not sharing elevators. It's easier to create your home as the center of your universe. People need that space for an office. They need a place to homeschool their kids, So it really has shifted the priority and made people really focus on the place they spend most of their time. And then, of course, that attributes to your community. Here in Coeur d'Alene, our office is a part of a wonderful collaborative called the IC, the Innovation Collective Den. What's fascinating is the traffic is higher than ever before as people from Amazon, Apple, Microsoft are here on campus getting a taste of North Idaho, and they're looking to plant roots.
They are. Well, they're doing it. Mm-hmm. Yeah, I mean, you're selling them houses right now,
yes,
all over the place. So we're seeing that. But I think what a lot of people don't realize is that this actually had already started.
Yes,
right?
yes.
Like we're talking right now, here we are with this big fallout and the quarantine and the COVID and all that. But at the end of the day, we're seeing people being priced out of markets in 2019. And they were already looking for, hey, a condo in Seattle is $1 million and I can buy a $500,000 home in Coeur d'Alene.
And live a great quality of life.
Right.
So even for our local market here, Idaho is second best in the nation for unemployment. So we still have jobs, we still have affordability, we still have a diverse economy. So much though that we're not invested in only one industry. So we're faring better than many expected. There was economists that predicted coming out of the recovery. They said Boise was going to be the #1 market, followed by Spokane, and of course Coeur d'Alene is kind of a satellite market with Spokane, and the expectations have been true.
Yeah, well, I think it was 2018. Amazon said they were going to move to Spokane, right?
Yep.
Because when a company is looking to relocate, they're looking at housing prices. They're looking at jobs.
Yep.
They're looking at cost of living because they're going to hire people from that market, right?
Yeah. And actually, as recently as last year, Coeur d'Alene was plagued with 2.9% unemployment. I mean, that meant practically anybody looking for a job had one.
Yeah, yeah. And at the same token, guys, again, supply and demand. You know, you have all those folks looking to a market, and there's not a lot of new construction.
Right, right.
And so you have high demand, low supply. So that drove prices up in this area, but they're still honestly pretty reasonable.
What's so fascinating though is when we reflect back on what we saw in 2005, the inventory is the biggest headline here. And what I mean by that is 2005 was still not the peak of the market. We had 3,500 units for sale here in Coeur d'Alene. We now have 1,350 units for sale in the entire metro area, which is a 65% decrease.
Wow.
So many people try and draw corollaries to whether this is positioned for another downturn. But when you look at the inventory, there are multiple factors that are essentially creating a unique environment. Let's look at this. Housing starts based on household formation is technically the lowest it's been since the early 1970s. And that is due to the shrinking labor force, and that constrains a lot of builders. Here in Coeur d'Alene, we're restricted, like a lot of communities, in the expansion of the urban growth area. We've got a lake to the south and a mountain pass to the east, so there's only so much development that we can do. Foreclosures are essentially non-existent, and we have the two largest market segments, the millennials and the baby boomers, buying properties and holding properties longer than we ever expected.
Right. So you kind of touched on, the 2008 versus now, because we're kind of at the beginning.
Right.
Right. So the big issue right now is inventory or supply.
Yep.
Right.
Yep.
And demand's got to be down a little bit because people are kind of transitional on their income.
Yeah.
But there's a lot that have cash and are just saying, listen, I'm going to get out of these big cities. I'm going to buy something which is still pretty affordable here.
Right. Oh, the affordability is incredible. Combine that with the fact that we are at the lowest interest rate we've seen since they started recording interest rates. Today it's 3.06%. I mean, the math on that alone, that is such a great hedge against even potential inflation at this point.
That's a really good point. So what that means is you can borrow at 3%, and inflation has been running about 2 to 3%. So you're basically borrowing other people's money to buy things that's going to hedge inflation moving forward. You're better off to actually borrow.
Yeah.
Right?
Right. Right. As long as you've got good cash reserves, specifically on the investment side, and the regulations have changed just a bit on the investment criteria, but still a fantastic time. Again, if you're patient for a good opportunity.
Right. So let's ask the $1 million question, because what's interesting to me is I actually asked my friend who's big time in the stock market.
Yeah.
I said, Andy, why is it that the stock market is so high?
Right.
When, it's supposed to be measured based on companies' performance. And, obviously companies are getting killed right now because of, the quarantine and the shutdown and all this stuff. And I'll share that with you later. But I actually have the same question, around real estate, because I'm not as involved in single family as you. And so, in a lot of markets, we're seeing prices go up.
Yeah.
And I'm like, okay, kind of scratch my head. It's kind of the same question. How is it that somebody could be uncertain about their future, their financial future from an income standpoint,
right,
and then see markets going up in pricing, right?
Well, and that is overcoming people's expectations of prices dropping. Again, that's what's setting us apart as a secondary market, as a mid-sized city versus the Seattles. You look at the daily headlines, they're not that rosy for some of the larger cities. And what's interesting is when you decide to invest in a city that may not be as glitzy and glamorous, they are based more so on speculation than potentially the offset of cash flow. So, rarely will Spokane or Coeur d'Alene make the national news for a roaring market, but we also don't tend to see the downturn as much if we see a market correction, which is absolutely why it should be on an investor's checklist to look for a market specifically in this economic climate that isn't going to be so speculative.
Yeah. So, another thing to consider is that you hear the word boom and bust.
Mm-hmm.
And so boom and busts happen in places like San Francisco,
Right.
Seattle, Los Angeles, New York, and that's what you're seeing now. So I
Yes.
was reading last week that the listings in New York went down by 57%. The listings, which means that's an inventory issue, right?
Mm-hmm.
So a market, some of these smaller markets, and by the way, this is still a pretty, Spokane is not a small town.
No, the urban area is still 500,000 in population. Coeur d'Alene is just 54,000 for the metropolitan area, or for the municipal area, then 150,000 for the region.
Yeah, so you're not going to see that big boom and bust, right? You'll see it, but it'll just be less.
Correct.
Right. So what are you seeing in the markets that you're in? Are you seeing the same kind of value increases?
So it again is exacerbated by the inventory. So since this time last year, we've seen a 27% decrease in inventory. So again, we already were complaining about inventory shortages, and the pandemic made it worse.
Yeah.
Fewer people felt comfortable with others going through their homes, or in several instances, due to the stay-home orders, if you had a tenant, you couldn't put your property on the market because you couldn't get access to the property if the tenant didn't want to allow showings. So there was a couple constraints there that kept inventory artificially low. And then, of course, when we saw people seeking a safe haven, if you will, or a more desirable, less dense area, that's when we saw that demand go up. So sales here in Coeur d'Alene are up 10.3% in price alone in a year.
That's incredible.
Incredible.
So what are you seeing right now? Like you're right in the middle of this.
Right.
We're 3-4 months into this.
Yep.
And we still don't know where this is headed.
Right.
What are you seeing now?
Cash is king. We're still seeing multiple offers, bidding wars, especially even in the high price point. I mean, obviously anything in the $300,000, $400,000, $500,000 is 3, 4, 5, sometimes 10 offers. But we just aren't seeing a sign of that slowing down.
Isn't that incredible? And it's only going to move up, right?
Yep. Well, no one has a crystal ball, and of course, the fear of the second potential shutdown is, I think, causing a little cause for concern. But again, we still feel rather confident out for our local market.
Right. Okay, so there's something else. Let's talk about the federal government and what they're doing to kind of delay any of these crash in the markets. And what do you want listeners to know around that?
I would say there are some expectations that the government in many areas has postponed or restricted evictions. So if you're looking at investing, always be cautious of what the legislative environment is. So for instance, in Washington, there's more stringent restrictions on your right to get your property back in the event of an eviction. It takes longer. Here in Idaho, it's more landlord friendly. So those are really important criteria when you're making an investment decision. So fortunately, under the CARES Act, landlords were able to get a 30-day forbearance with an additional option to extend for up to 90 days in the event their tenants didn't pay rent. Now, homeowners have been extended through the end of August, and there's even rumors that they could extend that further.
Yeah. They potentially have another 180 days beyond that. Yeah. So that's still to come.
Right.
There were, in June, 30% of Americans missed their housing payments.
That's a big number.
Whew.
Here in Idaho, it's only 5%, though.
Oh, wow.
5.8%.
That's really, really good. And by the way, that's what she's talking about. Take a look at the individual markets. So sometimes when they throw out these numbers, it might not necessarily mean that in that small submarket.
Precisely. Precisely.
So what's going on in like Sandpoint versus Spokane?
Sandpoint again was labeled a couple years ago the best small town in America, and then it hit the map, and it's again really driven prices up. It's actually a smaller market than here in Coeur d'Alene, which again the lower supply is actually seeing prices higher than Coeur d'Alene. You've got beautiful mountains, you've got the Monarchs, you've got Lake Pend Oreille, you've got Priest Lake, you've got a mix of outdoor opportunities, hiking, ski resorts. It's a really great community. We're so fortunate here.
It's a phenomenal slice of America.
It really is.
I will tell you that. So let's talk about the government a little bit more. You know, right now we've got this unemployment money, we've got the PPP money. You know, where do you see, you know, when all that ends, because it has to end at some point, you know, what do you see then?
We always go back in history and find corollaries. What I always look back to is what happened in 1999 after the tech bubble burst. If you fall under the premise that people prefer to live indoors, right, then they're going to choose housing, right? So when the stock market corrects, which very few people will say it's not going to, do we expect people to reinvest in something they can see, touch, and feel, right? So I think the most recent rallies, can kind of distract people from the fundamentals of the brick and mortar of real estate.
Yeah, and then the one thing to really watch, I think, that is, I'm searching for this. I haven't been able to find it. 2020 migration patterns of people.
Yes.
So you're feeling it. I'm seeing it. And what we're talking about here, folks, is this. You know, before you can actually see where people are going.
Right.
And you touched on it, for a moment when you were talking about the governors or the states that are highly legislative,
right?
Like Washington. If you buy a rental in Washington, it's very different if you buy a rental in Idaho.
Precisely.
If you buy a rental in California, it's very different than buying a rental in Arizona. Very different from a landlord's perspective and from a tenant's perspective. And so you're starting to see that more and more, and you're starting to also see it around property tax.
True. Very true.
So if you look at, and again, I don't want to be too political here, but you can really take a look at which side is kind of pro property tax or higher property tax. And so people are will start to make more decisions that way.
In 2019, Idaho was the #1 state for in-migration based on a survey of moving trucks. So that is one of the best indicators of how many people are moving to the area. In 2019, the governor of Idaho had an initiative to eliminate enough administrative code to make Idaho the least bureaucratic state in the nation.
It took 88 pages out of it.
88 pages out. So that's the mindset here, and that's not going to be for everybody. But obviously, when you see the migration patterns, it has been favorable.
Well, it will be, especially now. And this is the point. So what happens when people start to be uncertain about their financial futures?
Right.
They start to look at things, some of their biggest expenses, which is housing.
Yes.
Housing's a big one, and cost of living, and there's a number of other things, and safety. There's a bunch of factors that determine migration. But if property taxes are high in an area, they'll look to the next state.
Yeah,
period.
absolutely.
That's just the way it is. And
Absolutely.
If you wanted to, you can do a lot of research on this, but you'll see that, if you're making a lot of money, then you're like, I'm okay with the property tax. But if you're not, you might take another look.
Correct.
Right?
Correct.
And there's a massive difference between, let's say, California and Arizona or Washington versus Idaho.
Absolutely. And even the affordability of our water, we've got really good schools. I mean, those things people will start to compare. I mean, I recall a client who moved up here from California who was astonished at our water bill. I mean, those little things will start to add up when all else gets compressed.
Absolutely. When income starts to go down, people are going to start to look for those kinds of things because they don't want to really adjust their quality of life.
Yeah.
And and the other cool part is at the same token, because you said something earlier, this COVID thing, in my opinion, is an accelerator.
Precisely.
It's not really, it's just accelerating everything. And one of the things that it's accelerating are people working from home.
Yes.
And
very much
remote work, and you kind of touch on that. You talk about that, but that's becoming more and more and more and more and more, right? These big employers, they don't necessarily need people to show up.
Well, and it'll be interesting to see the efficiency studies or the productivity of the employee, because when a lot of the major corporations said, we're not coming back to campus until, the end of 2020 or 2021, once everybody gets into that workflow, you can arguably say, if my efficiency has been productive, I should be able to continue working remotely. And therefore, that opportunity to relocate to a more affordable area is key.
That's right. In fact, there's already big companies that have already said you don't have to come back to work.
Absolutely.
Like Twitter, they have 15,000 employees in San Francisco, and they said, you don't need to come back.
Absolutely.
Right. So those people can work remotely.
Anywhere.
Right. Right.
Yeah, and another interesting move is, again, we talked about the household as being the center of the universe. 14% of young adults ages 18 to 26 just moved home. So that makes your residence ever more important. Where you live is of primary importance now because, again, families are going to be living together longer in this environment.
Yeah, it's so true. Well, Melissa, I'm super proud of you.
Thank you so much.
Yeah, your company is just on fire. It's so exciting to hear. I know a lot of the listeners, are very interested in what's happening in single family. So thanks for all your information and everything you shared here today.
My pleasure. Thank you for the opportunity and great job on the channel. I enjoy it all the time.
Thank you. Thank you.